kudos on what you said the last time. As I remember, you were talking about Venezuelan debt, I guess, kind of being a buy at 12 cents on a dollar. And what was the last trade of those bonds?
About 42 this afternoon.
As oil comes online and all these things have to happen in terms of access to capital markets and elections and infrastructure, and you got all these different things that have to line up. Is there any way to value this going forward and saying, yeah, these bonds are money good?
Well, there's a difference between money good and more value. And the way I think about it, something is distressed if it trades below a value or restructuring value that you think you can achieve. So something that trades it from 100 to 60 isn't necessarily distressed if it's worth 20. But I do believe that Venezuelan bonds could certainly be worth more than 40. But let's be honest, it's not asymmetric the way it was when we were talking about it in August, right? But what happened over the weekend, I think the right tail is thicker than it was, fatter than it was, because one, the transition's safer. It wasn't just hand the keys to Machado and see what happens. There's not boots on the ground. But the U.S. is around, right? The U.S. is staying around the hoop. And, if the U.S. stays around the hoop and you get Bessent and Trump saying things like, we'll do whatever it takes, that means that you should expect a lower discount rate, higher oil production. So what drives debt sustainability? GDP. What drives GDP? Oil production. So if oil production's up and stability remains, maybe what would have been a 15% discount rate on a bond might be 9 or 10. So that's where the upside's coming from. It's not the easy money, but look, the easy money in Argentina last year was from 30 to 60, but there was still money to be made from 60 to 80.